following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends.
The following takes place between 2 p.m. and 3 p.m.
And we've got a market that's on the road to nowhere. I was a big fan of Talking Heads, and it is a road to nowhere. We're just kind of consolidating out the breakout higher. A lot of people probably thinking that they should pull the trigger short. I suspect that they are about 30 days too soon. We're at 2204 on the S&P cash, basically flat on the S&P. Volume is very brisk, though. We've already cranked out 3 billion shares on the NYSE consolidated tape. So that's a lot going on. We've got some big movement in the dollar. We're up 0.6%, back 101.53. I suspect that we're going up to about 105 before we start consolidating out the long-term gains in the dollar. We also have the TLT out here seeing a lot of movement on discussions about which way the yield curve is going to go long-term. 120.57, that's off 1.5% today, too. Market pretty much taking all of this in stride, kind of trying to go a little bit sideways out here. But, you know, there's just not that much juice in this market to the downside or the upside. A lot of people looking for a faster horse. The problem is if you get short now, how many people are going to want to sell before the end of the year? And you're going to have some kind of big event to get that moving. Right now, just not that much to drive somebody that much far or that much forward. But we'll continue to take a look at this as it comes along. But as I've said the last few days, I'm not expecting a lot of movement in the indexes before the end of the year. I'm playing some stocks that are highly short. And as I said to one of my subscribers today, I'm looking for offside penalties. That is, people way too short a stock as volume continues to decline over the next 30 days. My guess is that this may, or we may get one or more 2 days of big volume, and then we're going to just start declining all the way into the end of the year, and that's never a good thing for being short and having very light volume. But I do digress. Anyway, I guess it's time to get this party started.
And it's all just a little bit of history repeating.
And what do we have? Well, somebody in the den said, doesn't like it. I'm short. Everybody's short. I don't think you're going to lose anything. I just don't think that there's a lot to be made in the indexes right now. I think we're kind of trapped in this little zone. I could be wrong. But for me, I am thinking about some individual stocks that are way too short for conditions, not indexes. I think we'll just flitter around here for a while. But I think if I can draw a few offside penalties and make some money into the end of the year. What else is going on out here? Oh, on this day in 1988, after a 3-month-long orgy of ego and greed, Kravis Robertson Company wins the bidding war to do a leveraged buyout of RJR Nabisco for more than $25 billion, generating over $1 billion in fees for Wall Street and setting the high water mark for the LBO craze and junk bond binge of 1980s. And this was the event that really made Wall Street figure out that they could absolute rape and pillage that kind of winnings out of suckers in business if they could get something done. And of course, getting a deal done was all about getting that $1 billion worth of fees. Today, we still see this in the M&A thing. And of course, they're always pumping it and saying how great it is. For the most part, it doesn't make a hill of beans. It makes sometimes the CEOs look good in the short run. In the long run, most of these things have not mattered whatsoever. But Wall Street makes a lot of money besides pump and dumps and pushing one stock and manipulating it. A lot of it is these buyouts where they make huge fees. The other one is in the IPO business where they give big, huge money to push out shares to, I'd say more than half the time, I will call them suckers. But we'll talk about one of those IPOs that was a sucker IPO in a minute or two. It may be the next one. I can't remember which one I have and what order they're in. On this day in 1988, they proved that they could suck huge amounts of blood out of the market and bank it for themselves. What is it? Werewolves of Wall Street? Yeah, Werewolves of London. Another song from a very good guy. But these were a little bit different out here. And the bad IPO getting worse. GoPro is restructuring and cutting around 15% of its jobs in an effort to improve its struggling business. The latest jobs, around 200 positions, follow a cut of 7% of GoPro's workforce back in January. They include the closure of GoPro's entertainment division. GoPro president Tony Bates is exiting stage right. He was previously a Skype CEO, and that's it. But the point I wanted to make out here is, and I was going to make it in the newsletter, but there's no real position to be made off of it, so I'll just talk about it here on the show. And that is, guess what? You couldn't short GoPro if you wanted to. You can't get any shares. But what I saw Monday really amazed me, and that was I am subscribed to all these deal sites where you see all these great deals. And I saw one come across. I was looking for something to put in the stocking of all my nieces and nephews. And I thought, what would be a better little thing than, something like a GoPro? There have been some knockoffs of these things that have been around $100. But Amazon Prime shot me a little deal out here where there was one for $30. And I thought, well, I wonder how good one can be for $30. The real ones from GoPro are $300. How can they get $300 and yet this other? How could they make anything for that was $30? And I guess it didn't come with anything. I'm gonna have to buy a big expensive charger. I'm gonna have to buy the waterproof enclosure. I'm gonna have to do stuff. So I thought, well, I'll take a look in the reviews. So I go in there, start looking at the reviews. They're kind of interesting. Then I go on YouTube. More reviews, except these, of course, show the product in video form, show the video against a GoPro. Start looking at it and you go, okay. I got done with it and I said, you know what? This little thing is 90% as good as a GoPro at 1/10 the cost. How does GoPro go forward from here? We'll talk about a couple of other issues out here and then we'll move on. We will soldier forth to infinity and beyond.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
GLD is off 1%. Crude was up 10% last time I looked. We will give a tip of the hat to Andy Hecht on his calls for commodities for the last few days. He's hot as a firecracker, as they used to say. Anyway, we're talking about GoPro. But not only does GoPro have problems with knockoffs that are probably about 90% as good as the GoPro itself. In fact, the only knock I saw on all of this in the reviews was that the low light conditions for this one were not as good as the GoPro. But I'll guarantee you from $300 to $30, I don't have a problem with it, especially since I'm giving them as gifts to others. Could be very interesting. But that's not the only thing with GoPro, so I would say avoid it. The second thing, of course, is that they had a recall for their drones. Their drones were actually supposed to make this Christmas for them. They had to recall them. The only other company actually having a problem in this space is their biggest competitor, but they don't have theirs out either. So the whole idea of a big drone Christmas seems to be put off. One company didn't get it, Phantom, and GoPro had to recall theirs. But it looks like it's going to be a light drone Christmas. I could drone on and on about GoPro. See what I did there? Don't try it at home, folks. That's what I get paid the big bucks. American Eagle Outfitters came out with earnings last night. If you, somebody in the den, if you have Amazon Prime and you sign in, you can look and click on that. You can it's still available for $29. But you have to sign in and be a Prime member to get that $29 camera, $30 camera. So just sign in. I'm assuming that you're an Amazon Prime member already. What can you say? That's why it was a special. Okay. I saw it. If you click, there's like 3 buttons underneath the price. If you click the middle one, I think it says $29.95, and you can pull it up. Okay, Amazon Eagle Outfitters. Anyway, down huge on earnings. This is our last big call for teen retailers in the mall for clothing. I think the price pretty much says it all. You're down on 17 million shares already into the candle where this thing hit its low on November 9th with 4.8 million shares. I don't see this ever changes. So you're going to have some kind of societal change. Everybody quit wearing watches because they had a clock in their phone. Same kind of thing. Just not a lot of people going to malls to do shopping anymore, especially teens hanging out there anymore. That is seemed as gauche by the youngsters. But I don't know what else you can say about it. Down on huge volume. My guess is this thing's going to $10 fairly quickly. Let's check back into the S&P. 2204, 0.01% lower. So we're basically flat on the day. Volume is very brisk, though, 3.15 billion shares. And I suspect a lot of people getting way short ahead of a fun buying day. My guess is that there probably not going to be a lot of fun buying until Monday after the Italy vote. But it'll hold up. I don't think that there's going to still be some. But my guess is the big pop comes on Monday after the election. The only thing that probably seems to be a difference is what you buy. If the Italy election goes one way, I suspect that money will come out of European banks. If it goes the other way, maybe not a lot happens. But I think the downside is for the European and Euro banks out there if the election goes the wrong way for them. Because mostly this is about a big deal that's kind of like going to end up being like, was it Crete, where everybody's savings just were taken away one day in the dead of the night kind of thing? What can you say? I had an email before the show. You can email me too. The question was looking at CVS. So we will take a look at that. That popped nicely today. And I guess the question is what's going to happen. It's 77.02 for the high today. It hasn't hit the high of November 10th yet. That had 20 million shares. You got about half that today, 7.4 million shares. Maybe you get lucky to get 12 million shares. So I don't know if there's a whole lot in this. My guess, though, is this is going to creep up through the end of the year, and you're probably looking at 79, 80 bucks. If you were very lucky and this thing hit 82 bucks, I'd sell it in a New York second. That would be a total gap fill of this huge down day of the 8th of November. But a lot of stocks will do exactly this pattern going into the end of the year. So you want to watch it. That is just filling these big gaps down. Everybody gets short. They slowly start covering to the end of the year. These things come up on no volume. And this thing hits 82 with no volume the 29th of December. Going into the first of the year, you want to be short. So we can take a look at those. What else do we have going on out here? Did I not fire up my clock? I don't think I did. There it is. Or I closed it. What else going on here? A lot of discussion about why the IWM is not moving the way everybody wanted it to. I don't know if there's anything, I don't look at intraday charts for the most part. I kind of look at the end of the day. I like to watch early in the morning, and I watch how they close at the end of the day and the volume. Of course, theoretically, or at least a lot of people think that the dumb money comes in the first 30 minutes. The smart money is at the end of the day. I don't know if it's so much dumb and smart as big money and retail traders. Retail traders kind of start the day off, and the big men of Wall Street end it. But, you're down here. Volume hasn't really picked up all that much. You got a little over 20 million shares compared to 28 million shares yesterday. and 32 million shares. So you're pulling back here on a little lighter volume. Again, I don't see the big reward out here for being short unless we get something, and I'm talking about 9/11 kind of something. I'm talking about Pearl Harbor kind of something. I just don't see the risk reward setting up for a lot of things, but being short here is not one of them, especially for a lot of people that are prematurely short, and I hear they have creams and lotions for that. What else do we have out here? I wanted to look at a few others. Autodesk had earnings out, ADSK, and they kind of hit this wall, it looks like, around this level. They've come up off the lows fairly strongly by changing their software, especially a lot of the software for doing video editing. We've talked a lot about, but they've done it on subscription. And a lot of people will have this for a year or so, but they're having problems keeping that level up, down on strong volume back above this base that's about 72 or 73. Never really had a good sign of strength, but you got some decent volume at the highs. We'll talk more about this in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we are back. What else? Oh, we were talking about Autodesk. Again, they have a suite of software from After Effects to other things that, especially a lot of the YouTube online crowd for video editing use. And, it's been pretty effective. It's just at some point you get those people that start to drop off, that aren't successful, that do their YouTube channel, and they do it for a year or two, never really amounts to anything, and then they move on. And that's you had to kind of wait for that with Autodesk. There's not a lot of impotence now. YouTube, especially the YouTubers, are getting a little bit more long in the tooth. In fact, many YouTubers are leaving YouTube to go out of the YouTube ecosystem and make more money elsewhere. A handful in the last couple of weeks have started to do that. But, there's just not that much in that. Splunk, S-P-L-K, P-L-K, yeah. Also came out with earnings. This thing opened up fairly decently, sold off all day long. This is one of the bigger data mining companies for artificial intelligence. I'm going to call it machine learning. This one's been a kind of a tough one out here. It's kind of gone sideways for a while for an IPO. I wouldn't call it failed. It just it did get back down to 29.85 before it got its mojo back. Now it's just going sideways out here. Very tough to actually see this thing. You would love to see a test of 29.85 again on light volume. It's kind of hard for me to buy this thing when it may just do a repeat of its swan dive back down to that February 11th, 2016 low. And it's got a lot of gaps to fill down below too. This may be its swan song. It's just very hard for this company. I kind of look at LinkedIn as the pattern for that. These companies, more and more depending on having a giant web service like Amazon Web Services or Google's web service or Microsoft's Azure or Google's, what do they call Google's? Can't remember right off the top of my head. Oracle's got their own, and all these guys are using that as a loss leader for software like Splunk makes. So maybe the big deal on this is that it gets bought out by one of those bigger companies one day that really needs it. I'm thinking maybe Google or Oracle would be a better buyer of this. For all I know, this is why this thing came off that 29.85 low, but not acting well today in that space and down on significant volume. My guess is that this is headed back down to around the $51 level as we go forward, but may just go sideways until Christmas before it starts moving lower. We speculated whether Amazon was in an ABC down. We talked of their problems the last few days. Certainly looks like another day of looking like this is at least going to come back down and test the $710 range. The shadow is over this with the appointment of people that are specialists in antitrust antitrust enforcement. That continues to be an issue with this, along with huge amounts of spending that Amazon's doing on new aircraft. But, this is not a bad-looking ABC, and that would take you down to that 600 to 660 range that has a giant gap, and I would not be surprised to see that thing hit that gap over the next maybe 6 months. It may take a while for this thing to work out. It may just go sideways around 710 for a while, and maybe in the next earnings report get down into that 610. So what are we? It could be what, another 3 months or so. It wouldn't be hard to put on that. Maybe it goes sideways for a while, and then in the next earnings call gets the move down into that 660 range. Could take longer, maybe 2 earnings calls. But I think it's at least it's wounded if it's not bleeding. You can give me a call at 877-927-6648. And, of course, you can email me at path@tfnn.com. What else do we have? Hang on just a second. Trying to look at a few things. 2202 on the S&P cash. So 3.3 billion shares out here. See if anything else is happening. Let me look at a couple of things. I got some stocks. Netflix, not doing much, but let's take a quick look at it. Did see a little press article that was kind of interesting to me, and this is what I've been waiting for. That is that you do not have to be online to download a movie. Netflix, I'm not sure if it's all movies or some movies. I'll have to check another time. But apparently there are at least some movies you will be able to download to your device, i.e. phone, if you wanted to watch something while you're going across country on an airplane or something like that. But they are allowing you to download these and watch them. I don't know how many you can, but, you know, if you could at least do one for before you got on a plane, that'd kind of be kind of interesting. But the idea that everything's being streamed all the time, it's kind of interesting, but isn't it kind of nice to be able to, instead of use all your cell phone minutes up, be able to maybe download it while you're next to your Wi-Fi connection and then watch the movie later, maybe while your kids are in the car or something else. This seems to me like the logical progression. What we saw yesterday, of course, in the announcement by AT&T to only see this one day later kind of makes me think that there is a lot of tit for tat in this cord-cutting business. Netflix, you know, it's got a lot of big gaps down to about 100. I've been thinking it goes back to that range probably in January or February. Again, I think too many people shorting too many stocks out here right now to make me think that I'm going to get too excited about what's happening. What else do we have going on out here? Okay, I got somebody asking me what's going on. This is kind of what I was talking about in these massive short squeezes. Western Digital was a good example of that. I think we were short about close to $60 in Western Digital in the Tech Insider. This thing kind of came back down to this $53 level, and I thought that was about it. Too many people piling on this, so we covered our short in the Tech Insider on it. You know, we made a quick $6 out of it in a handful of days, so not a bad deal. Normally, I want longer ones. But this thing has been going up on lighter volume up on this. This is one of these things can be a pretty sweet low-hanging fruit come the first of the year if you can continue to see these very light pushes higher in a I think is kind of a failed business right now with just spinning hard drives. We'll be back after this short timeout.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. We're going to look at a few more stocks here today. You can email me at path@tfnn.com, or you can call me at 877-927-6648. Don't make me the Maytag repairman and lonely. Give me a call. I need your call, please. Now? Not really, but it would be nice. So what else do we have going on out here today? Let's take a look at some of the stuff I'm looking at. Let me get my scans up. There were a few out here that I thought were kind of interesting. Tractor Supply, been watching this one. Again, a lot of these that blew up are headed back up to these levels. Tractor Supply, I've been watching this thing get up to about $82. That would be very interesting to me on a short position. Volume very light. It may not even make it there. But a lot of times it's this last 2 or 3 weeks of the year with light volume that these things come up and tag them, and they are very sweet trades. Teva Pharmaceuticals, another one out here. Wanted to see how this one. Some of these look like maybe they had some kind of volume that would make a low out here. This one's been kind of interesting to me. It's kind of floating around down here. Down again today on lighter volume. You want to close back above $37.82 on light volume. 40 million shares is the spank down on November 3rd. 27 million shares on November 23rd, and of course just 5 million shares today. So that's kind of what you're looking at out here. And at the same time, you want to go through more of these. But the IBB kind of coming back. My guess is if you wanted to think that an ABC was forming, and it may be a horrible ABC up to $300 from the end of the year, maybe 267 might be where you're looking at. About a half fill of this gap up on the 9th of November would get me kind of thinking if the volume really starts to evaporate as it has. I mean, this thing gapped up on 10.4 million shares on the 9th of November. Now we're looking at 1 million shares on a down day. Even if you go back to the 23rd, that day just had 1.9 million shares. So you had the big move. You're having the pullback on lighter volume. Now, am I a big bull on this one? The answer is no. But I may entertain buying a call on this through the end of the year and a short squeeze in a lot of these biotechs. Most of the time, you don't get a lot of news in it, negative news. So you basically have the risk of it going sideways. This one may have just a couple more bucks on the downside. We will look at 2201 on the S&P cash, off a whopping 3.5 points on the S&P cash. Volume is closing in on 3.4 billion shares. So what else do we have out here? Look at a few other things out here. I have to make noise here so you don't think I'm dead mic, but I've got to look through a couple of stocks out here that I'm looking at for possibly buying or shorting. Okay. Good enough. Okay, the market does go on, even though we're on the air, by the way. Dave and Buster's wanted to look and see how this one was doing. It's come back up and filled its gap down. That gap happened on the 26th of July. That came down with about 1.5 million shares. Got into it yesterday with 1.2 million shares, and it's kind of pulled back a little here, but on lighter volume. Again, what you're hoping for is these things come up. You want this pattern to start working itself out if you're thinking about possible shorts for the beginning of the year. And that is, you want to see these things kind of come back up, maybe even break the previous high on lighter volume, and just keep drifting up on lighter and lighter volume into the end of the year. And then you get exactly what you got last year, which is you come out January 2nd and everybody starts firing away and selling as fast as they can. Some other stocks that are testing previous highs. Lockheed Martin, of course, it came off with the Trump rally. And that's kind of interesting. This thing did break through the previous high that had a lot of volume. Didn't do so with that much gusto, which is kind of interesting. He only had 2.4 million shares into the break on the 17th of November. But on August 15th, he had 13 million shares. That's probably why this thing kind of going a bit sideways out here. I couldn't hit unless it broke out and then came back to 265, and or more likely, this thing comes back to about 242. I like that double gap right around that area as a potential buy target if you wanted to go long. So what do you got? $25 on the downside out there if you're betting on the end of the world. APD, there's another one that's filling its gap. Air Products and Chemicals. This one's coming back up and filling its gap on lighter volume. We're talking about the October 3rd pound down on 3 million shares. It's up in here with 2 million shares so far. So this one's probably doing a little bit better. 2 million shares yesterday. Today, though, this thing's doing exactly what I like, which is coming in, filling about half of an existing gap. And we may be there already or in the next few days. This thing at about 145 with no volume would say that's about everything that you can look for. ALR. I'm taking calls. Yes. Joe from New Jersey. How you doing, Joe? Are you there? Oh, he fell off the... I wanted to look at ICE. I don't know what he was talking about. Everybody's just got to give me a minute or two. I'm not always sitting there focused on looking out there. Yeah, they may have to wait a minute or two. It's not like we're charging them. On ICE, and a little bounce back up here. You know, we've had a lot of volume. I would be kind of reticent to think that this is a play right now. If the market started moving down a bit, maybe the volume would come back. I would probably think of this as a play at the first of the year based on maybe a market that starts moving a lot more. Okay. AAP, which is Advanced Auto Parts. Hopefully Joe calls back in. It's just, you got to wait a minute or two. I'm not always focused on these little instant messages over here. I'm actually trying to continue talk and do stuff, which is kind of like walking and chewing gum at the same time. You only have 100% of your attention. You can't have 127%. And so I have to use my 100% on talking and moving charts around. 172.80 on Advanced Auto Parts, which is July 28th. High at 1.7 million shares. Got into it with 1 million shares on November 28th. And that was it. What do we have? We'll be back here in a minute. This is kind of interesting. Up, touch the highs on lighter volume, start to pull back a little. This one, you got that double gap at 158. Let's start looking at that. We'll talk about that when we come back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we come into the home stretch of the Power Trading Hour, we've got Tom O'Brien for the next 2 hours. It is Wednesday, but we will look forward to that. A few earnings after the bell tonight, many more tomorrow. So we'll continue to look at that. But you might have a little bit of action after hours tomorrow night. But, kind of a quiet day. A couple of questions or statements in the day made me think, and that is someone saying, you know what, this is some kind of fun buying. And I think maybe I've given the wrong impression of what fun buying is. But why don't we go back through it? Fun buying is buying and being 100% invested in the last 3 days of the month to the first 2, sometimes the last 2 to the first 3. You'll have to look in the fund's charter, but it will tell you that we plan to be 100% invested. And why it says planned it doesn't mean that they won't even go a few days farther than that. If there's some kind of a big event happening, they'll wait until after the event. So some people saying, is there reason for them to buy pre this weekend? And a lot of times not. A lot of times they'll do the same thing we do, which is they'll work over a weekend and they'll figure it out. I said earlier in the chat room, I think 12:30 or something, if I was a fund manager, I would probably wait until the weekend, see what happens in Italy, what happens else. I can still buy Monday. That's still within the charter of when to buy. And that's why a lot of times in this fund buying thing, you will see that you get this huge day it seems out of nowhere, but you don't really want to pull the trigger short until you get out of that fund buying. There may be some intraday money to be made, but normally what you're going to get is something, and normally what you'll see is kind of light volume. A lot of people are going to get short. If you want to get short fund buying, you want to wait until you see a nice big spike in the market to do it. You don't want to probably wait for 2 points off on the S&P cash. You want, something like 10, 20 points higher. And for that to roll over kind of throughout the day is a good sign that you've made at least a temporary high. I think just a little bit of, it takes a lot of patience. Let me put it that way. It takes a lot of patience. But fund buying does not mean that they have to start buying today. Doesn't mean they have to start buying tomorrow. Doesn't mean that they start buying, well, it does kind of mean they have to start buying by Monday. But they can start anywhere through this period. There's nothing that says they have to buy today. So if they're buying and selling stuff, now one of the interesting things, if you wanted to make an argument that they are buying, is very good volume. We've got 3.45 billion shares already on the New York Consolidated Tape. So somebody's doing something. There's a lot of action. What I can tell you is that if a lot of people are selling, they've only been able to push this market down 2 points on the S&P cash. That does not make me think that there's a great deal out there. We did get to 2214, which is a higher high out here. My guess is that we had a lot of people pile on short, and my guess is that those guys by probably Monday will have covered their shorts again. So, like I said, probably some intraday money to be made out here. Am I looking at anything more than us opening up yet another 7 or 8 points in the morning again on the S&P cash? We're going to be right back into this trading range. We're going to be doing some consolidation. We're going to probably have a little bounce come Monday for fund buying. That sets up a lot of people on the wrong side and short. Volume contracts, and you slowly move up throughout the end of the year. Well, at least that's one person's opinion, and it matters because it's mine. We'll see you tomorrow. Same bat channel, same bat time. Sell when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.